Welcome to Construction Genius, and I'm glad to have Kathe Barrington back on the podcast. Last time we were talking about WIP reports made simple, and we broke down the fundamentals of the WIP report, what it is, how it works, common mistakes that cause contractors get blindsided financially. Today, we're taking the conversation to the next level. We're going to show how to use your WIP report as a strategic leadership tool, not just something your accountant hands you once a month. We'll dig into how the WIP helps you make smarter decisions, protect your cash, manage your project managers, and ultimately grow your profitability. If you want to run a construction company with clarity instead of chaos, this is the episode for you. Let's dive right in. This is Eric Anderton, and you're listening to Construction Genius, a leadership masterclass. Thomas Edison said that genius is 1% inspiration and 99% perspiration. If you're a construction leader, you know all about the perspiration, and this show is all about the 1% inspiration that you can add to your hard work to help you to improve your leadership. Kathe, great to have you back on the show.
Forward to it. Glad to be here.
Yeah, in our last episode, we broke down what a WIP report actually is, how it works, why it matters, and the common mistakes that trip construction companies up. Today, we're going to take the next step. We're going to talk about how to use your WIP report to make better decisions, protect your cash, and grow your profitability. And so this is where the WIP stops being an accounting document and becomes a leadership tool. So we're going to jump right into that. So let me ask you, when a contractor truly understands their WIP report, what becomes possible for them that wasn't possible before?
I think that you need to understand it in order to be successful in construction. If you have projects that are longer than a month and you have to have a job schedule for bank and bonding, you need to understand your WIP in order to be successful. So I don't think it's a possibility thing. I think it's a necessity thing.
And so that's interesting, right? Because some people may look at the WIP report as sort of a nuts and bolts tactical document that they focus on right now, but it's really a bigger strategic planning document, isn't it?
Absolutely.
So what are the top 2 or 3 numbers on the WIP that every owner should look at first, and why?
The first ones that I always want to look at are your contract amount, your estimated cost, which is your budget. And if you're looking at a third number, then it would be the over/under billings at that moment.
Okay. So in looking at the contract amount versus the estimated cost, what are you looking for there specifically that's going to help you with strategic decision making?
I mean, one, I'm going to look at the difference between the two and the gross profit, right? So I want to see how big those numbers are. If it's a smaller job, I might not be looking at those as closely. So the size of the job is going to be really important. And then also how tight the margin is on that particular job. Do I have to look at it a little bit closer because it's a really tight margin? Do we have a lot of possible gross profit in it where I don't have to look at it as closely? So it's a gauge at first of which jobs to really hone in on.
And overbilling versus underbilling, obviously overbilling is kind of cool in the sense that we get money for stuff we haven't done yet, but we haven't done that work yet. And so it can be kind of deceiving. How do you advise an owner to balance that overbilling, underbilling dynamic?
I mean, for me, I want to see at least as much overbilling into that next billing cycle as much as possible, especially if it's a labor-intensive contractor. If you have a lot of labor in your costs, then you really want to make sure that you're overbilling at that end of the month, because that's going to help drive your payroll for the following. If you're not overbilled, then you're going to have to figure out a way to finance all of your costs, and payroll are ones that you can't defer on a 30-day payable cycle. You've got to pay that weekly. So you want to have as much overbilling as possible to be able to kind of manage that cash flow without putting it on a line of credit.
So let's just strip away the mask a little bit here and think about how you approach your customers, right? So assuming that you're working with savvy customers, if you're overbilling them, they're going to know that. Is that right?
I mean, they should, if they understand the WIP and they understand what's going on with the job and that sort of thing, especially with the GC situation. GC is a little bit more than maybe a subcontractor. But yes, absolutely. The owner should know, and there should be communication, and the owner should also be receptive to the fact that they understand you've got payroll to cover.
Okay, great. So there's an honest conversation that you can have. You could go to your owner and say, hey, listen, rather than tapping into the line of credit that we have, no, we're going to be overbilling you slightly here so that we can be running payroll. Are you going to be that frank with them, or what are you going to be doing there?
I mean, yes, obviously you're going to have conversations with them. You're going to try to get as much of your gross profit as part of that pay app, right? If you've got a 15% gross profit on your stuff, then you're automatically, hopefully, getting that as well. So yeah, it's communication, and most business people understand that you're trying to stay afloat and manage your cash. So I don't think there's anything wrong with having those conversations.
Yeah, so that really goes to almost like a deeper issue, the quality of the relationships that you have with your owners, even with other subs, suppliers, et cetera. That really has an impact on how you can run your business from a financial perspective.
Absolutely. Absolutely. I mean, I've seen customers that they deliberately reject pay applications. They deliberately hold on to payments and that sort of thing. And unfortunately, those are the GCs and the owners that most of the time people don't want to work with, and they will only work with if they're desperate.
Yeah, it's interesting. How can the WIP reveal problems on projects months before they show up in the P&L or the cash flow?
So for me, that indicator is generally first seen through the underbilling. So if there's an underbilling on a job, that's going to be my first red flag that I'm going to start asking questions about. And if it's not a project manager internal billing issue, then it's usually that next step of unapproved change orders. Things are going bad on the job. The customer owner's not willing to approve the billing. So there's always usually a reason that there's an underbilling.
It's interesting. It really makes me think about conflicts on a job's a specific job where you may think that it's between, let's say you're a sub and it's between, let's say, your superintendent and the PM from the GC. They actually may reflect problems that are higher up the chain in the relationships at the executive level. Have you ever noticed that?
Yes, absolutely. Absolutely. I mean, if you have things that are being done verbally on the ground, by the time it has to get up the chain and the approval process and whatever that is, there could be delays in that. There could also be disputes and issues in that. So yeah, it definitely can show in that respect.
So does that require, then let's go to the change order issue. You might have a zealous PM who sort of has this engineering mindset. They look at the contract. We're contracted for X. We've just done X plus one. Therefore, I'm going to get X plus one because that's my job. And yet we know in construction, that's not always how we run change orders or how we handle changes in the project, right? So what advice do you have to the executives when they're working with their PMs in terms of how they're dealing with change orders so that you obviously get paid for what you're doing, but at the same time, maintain relationships with the owners when you're building a project?
I think honestly, that starts from the top down. So you've got to have some really good internal processes that you have that your PMs are made to follow and should be following. So you guys have your own internal process, because if a project manager is making these decisions on their own without bringing in upper management or whoever they're answering to, that will cause problems in and of itself, right? Because now you've got people that really shouldn't have the authority to make these judgment calls necessarily to make them. Because what happens if it doesn't get approved?
Right. All right, quick break to talk about my book, Construction Genius. This is what I want you to do. Go to Amazon, search for the book, read all of the 5-star reviews, because there's a ton of them. Over 50 to be precise. And the reason I want you to read them is because real people wrote those reviews who've actually read the book. And it'll give you an idea of why you should go and buy a copy right now on Amazon. And here's the deal. If you purchase 10 or more copies for your company, and then send me an email, eric@constructiongenius.com, I'll come in via Zoom and do a 1-hour Q&A and a bonus training session with your team at no charge. I normally charge $4,500 for an hour of my time. And again, for you, I'll do it at no charge if you buy 10 or more copies of my book. And the reason you should buy it is all in the title. It's effective, hands-on, practical, simple, no BS, leadership, strategy, sales, and marketing advice for construction companies. So if you're in the construction industry, this book is for you. So you can get it on Amazon. You can also get it on Audible in the audio version as well, narrated by yours truly. And I know you'll really enjoy it. So go out and get the book. And now back to the interview. Yeah, so it's interesting. It's almost as if you have to sit down and say, okay, here are the parameters for when we're going to bill a change order. This is how we're going to handle the negotiation of the change order. If there's a problem with it, this is when you bring me in. Because, you can have a PM maybe running a project and there's a problem on a change order. And because they're human beings, they don't necessarily want to bring it to the light immediately, right? Hoping for the best. And then, 3, 4, 5 months down the road, there's a massive issue.
Or authorizing the work. And so they're like, well, the work's already done. We had to do it. And it's like, well, are you sure you really had to do it? Really? Are you sure?
Yeah, that's interesting. That's a challenge for a PM, right? Because, you're on the job, there's boots in the ground, there's crews on the site. You might as well do it, right? But at the same time, well, hold on a second. Let's think about the relationship. Let's think about where we're at of the project, how much this is going to cost us before we make those kinds of decisions.
Absolutely. And that's what I hear a lot as well. We were already there. We were doing it. They were putting pressure on us. And that can go south real quick.
Yeah. I think we're already touching on this, but what other patterns in the WIP tell you a project manager is in control or losing control?
Obviously the over-underbillings. The underbillings would be a key indicator. The other one that I don't like to see is what I call a roller coaster ride with the WIP. So having a lot of fluctuations in the contracts and cost estimates and the gross profit. So 1 month they're up, the next month they're down. So kind of like a lack of really consistency in that job.
Okay, so how then do we level out that roller coaster? If we want to just stay on a relatively flat line, or we don't want to go up and down, what are some things, again, that the executives need to be working with the PMs on?
Making sure that you're paying attention to the budget line items. Because one of the things, if you're using only the system, your software system to do this, and you're not properly managing your estimates and your job costs and all those things, then when the system pumps out that report, it can cause those fluctuations because the job costing isn't being managed. So really reviewing the job cost reports on a regular basis. And I think PMs at minimum should be doing it weekly and making sure things are coded right, costed right, everything's in the right bucket, because you can have a few line items that aren't right. And that will affect the entire job because of how the percent complete works.
Okay. So where does the WIP directly expose upcoming cash flow problems, even when the revenue looks strong?
Underbillings, 100% underbillings.
It's very interesting. So you just have to keep it top of mind, right? Overbilling, underbilling, you have to be extremely disciplined. You can't trust necessarily what your computer's spitting out to you. You have to have those conversations.
Absolutely. Underbillings to me are never a good thing, ever.
Yeah. So going back to earlier in the conversation, that means that you've got to be forthright with your clients. You've got to be kind of aggressive. You've got to paint the picture for them. You've got to help them to understand. Because sometimes, you're working with a client who's never built a project before, right? And they don't understand how construction works. They just want their building at the end of the day, right? And so they need that education.
Yeah, absolutely.
What are the early signs of margin fade that a leader should watch for, and how should they respond when they see them, other than the underbillings?
In all honesty, that is the big one. That's the one you look for, because that is the next question again is why? Why is there an underbilling? Is it a timing issue where you didn't understand where your costs were? Or 2, is it unapproved change orders? Is it a dispute with the owner that they don't want you to bill for certain things that you've already done? There's always a reason for an underbill.
Yeah, it's interesting. Okay, so let's shift a little bit. It's like when you're starting the project, or not just a project, but even when you're bringing in a new project manager, you have to be really clear with them on your philosophy and your approach on billing, so that they know as they hit the ground running, this is how we do it around here in terms of underbilling versus overbilling. How should WIP data influence bid strategy and backlog planning as you're looking out 6 to 12 months in your business, do you think?
The backlog is a really important number to be looking at on a continual basis. I look at that very closely every month. Obviously, you want enough backlog to get you through a certain length of time. So looking at that is really important, because that'll give you an idea of how profitable can I be at year end with all the jobs that I have now, or how long are these jobs going to last? How much longer do I have before I need to make sure I have another job on here? So that's really important indicator of how active you have to be in pursuing new work, and whether you can even take it on. If your backlog is really high, which is phenomenal, you might not be able to take on more work without hiring and making other decisions, or you're going to be over inundated.
Yeah, it's interesting. I think about it from a strategic perspective. Obviously, the best construction companies, they're building the right projects for the right clients in the right locations. And as I'm looking at the WIP report and I'm noticing some of those underbillings and maybe issues with disputes or unapproved change orders, that can be a real red flag telling me, hold on, this is not the right client. So if they're asking me to do more work, that then gives me room to have that conversation with them and say, hey, listen, if you want me to do the project that's coming up in 6 months, we need to have a discussion right now about this current project, which is not going the way that it should be going.
Absolutely. Yes, absolutely.
Think about the last time you promoted someone into a leadership role and it failed. Why did it fail? I can tell you one reason. People know how to build projects, but they don't know how to build and lead teams of people. Construction comes with its challenges that only insiders truly understand. Generic leadership training doesn't cut it. You need a program to train your leaders built specifically for construction professionals led by an industry expert. And my online course, The Shift, is exactly that course. It has 5 modules. It'll teach your people how to control their calendars and reduce stress and embrace chaos and accomplish their critical tasks. It will teach them the 3 essential messages they have to communicate every day in order to motivate and lead their team effectively. It'll show them how to build and lead a high-performing team, give them a framework for running effective meetings so they'll be able to solve problems in less than an hour, and also give them a higher perspective on their leadership that will enable them to work on the business and on their teams and not get stuck in the weeds micromanaging. So go out to my website, theshift.constructiongenius.com, read all about the course, and then enroll yourself and your leaders in the course, and I guarantee that it will transform your leadership. If it does not, you take the whole course and you didn't get benefit from it, you just send me an email, eric@constructiongenius.com, and I will cheerfully refund you 100% of your money. I'm really confident this course will transform your leadership. So again, go out to the website, theshift.constructiongenius.com, learn more about the course, and start taking it today. So just walk us through, again, that disciplined WIP meeting on a monthly basis. What absolutely must be covered?
So definitely the high level, the contract and the cost estimate. Those were the 2. Addressing any underbillings and the reasons why. If there is fade on a job, so I try to look at things from a month to a month basis. I also look at it from a reporting period to a reporting period. So if we're reporting quarterly financials, I'm looking at that. So did we have fade? Did we have profit increase? How long has the job been going? What's going on with those jobs? So having a frank discussion about all the jobs. And if you have a ton of jobs, then maybe it's just you set a threshold, not necessarily looking at all the tiny jobs. But I think you should look at all of them, to be honest.
It's interesting. So then to improve profitability in the next 90 days, would you say it's the underbillings that you would tell someone to focus on in terms of the data from their WIP report?
I mean, that won't drive profitability. That'll drive cash flow. So not necessarily with profitability. With profitability, what I look at is honestly the job costs. I start diving in a little bit deeper and start looking at like the indirect costs and the costs that might not actually be on the WIP, because those are kind of hidden areas of profitability fade that people don't like to look at and need to be.
Okay, so let's talk about that. What are some examples of indirect costs? Because when you're saying that, right, I think a lot of times, I know the best contractors don't do this, but some contractors, it's like, I landed this project, let me go out and buy X, Y, and Z, right? Let me go buy a new piece of equipment, or let me do this, let me do that. What are some examples of indirect costs that are killing contractors that they really need to get their hands around if they're going to improve profitability?
I mean, so the first thing I'm going to say is I'm a believer that as many costs that you could put against the jobs that you should. And so I don't like indirect costs in and of themselves. I think they all should be brought back into the jobs in some way. So when you're talking about equipment, you should have some sort of equipment allocation process if you have owned equipment. It's no different than if you have rented equipment. You should be charging your equipment costs back to the job. So in that sense, are those equipment costs covering your actual equipment costs? So that's kind of one set of indirect bucket per se. But then you have also the other costs that some people might not be putting to jobs that should be. So cell phone charges is one, usually like yard labor, indirect labor of costs that they're saying, well, we can't charge this to one job because it's warehouse costs, but there's always ways to charge it back to the job. And looking at those in a really detailed way, because you might think you're doing 25% on every single job, but then you take all the indirects and all of those costs and you're making 5% and your G&A is 10. You're wondering why you're losing money.
Yeah. Okay. So then would that mean I would take it, let's say I look at my shop costs or my warehouse costs, and then would I allocate a portion of that to each project? How do I come up with that number, that allocation?
So yeah, that's generally what we'll do is we'll figure out allocation, and sometimes there's different buckets. So like, for example, insurance costs, I try to direct charge those as much as possible because they're usually based off sales or payroll. So I'll charge those back to a job if it's not already happening through payroll. Other indirect costs will definitely do some sort of allocation. So generally I'll try to do a cost. So whatever the monthly costs are, we take a ratio of what those costs are. Some places like to do labor. So we do it based off labor or labor hours. So it's really not a set science on which way to do it. It's whatever works for that particular company and what we can automate the most as well. Because we've done, like $4 per hour through payroll, automatically burdened. Then we kind of assess it and see if we need to change that every few months.
Just to kind of put a bow on this part of the conversation, we've talked about indirect costs. What about overhead? Where are folks really missing the boat when it comes to overhead?
I mean, trying to put things into overhead that really are indirects, trying to bury them there. So
Why do people do that? Why do people do that?
They think it makes their jobs look better.
But why do they want their jobs to look better?
I always ask that. It's, your financials are what they are. And most people that are reviewing them, the bankers, the bonding agents, they know what's going on. They're looking at financials enough that it's like, you're not hiding anything. And in my opinion, you want your jobs to really be the best reflection of what is possible for you, because that's where you can make those management decisions. So if you're bearing costs to try to make yourself look better, your financials look better, it's not really doing a service to you and your success.
So I guess all progress begins by telling the truth. Okay.
Absolutely.
And sometimes the truth hurts.
For yourself sometimes.
Yeah, right. It's usually, if you can tell the truth to yourself first, then that's usually helpful. What's the single biggest missed opportunity contractors have when it comes to using their WIP report to run their business?
I mean, the cash flow part of it, really, in my opinion, managing the cash flow, because that's still only one piece of it, right? Like you still have your AR and AP, which is the timing difference between the two, but it's really a cash flow tool. It's a profitability tool. You can really forecast where you can be based off that one schedule.
Excellent. All right, Kathe. Well, I know this is super helpful. We did WIP 101. Now we've done WIP 201. And so that's tremendously helpful. I really appreciate you coming on the show and taking a deeper dive here today.
I appreciate being here. Thank you so much.
Thank you for listening to today's episode with Kathe. And this is episode 359. 357 was the first episode on WIP Reports Made Simple, so check that one out if you haven't listened to it yet. The two episodes work well together and give you a comprehensive look at how to use the WIP report in your business. And feel free to contact Kathe if you have any questions about the WIP report. I know she'll be happy to chat with you. Thank you for listening to Construction Genius, and we will catch you on the next episode. Thank you for listening to this episode of Construction Genius. Hope you found that 1% of inspiration to help you in the next few days. If you like the show, please give us a 5-star review on iTunes, share it with other construction leaders who you think would benefit, and always remember that the show is brought to you by Kick-Ass Meetings. I've been working with construction leaders since 2004, teaching them how to run extremely effective problem-solving meetings that gets their people collaborating, taps into their creativity, and to get yourself a free copy of the Kick-Ass Meeting Report, go to www.ericanderton.com/kickassmeetings. Grab yourself that free report, read it, Use it in your business. You'll find it extremely useful. And thanks again for listening.